People said this could never happen in the United States. JJ, you're just fear mongering. The dollar is the world's reserve currency. We'll never see inflation or especially hyperinflation. It can never happen here. The US is different. We're immune to the laws of supply and demand. Stop being doom and gloom and stop fear mongering, JJ, they said. Hey everybody, you're watching Bull, Boom, Bear, Bust. Today we're going to talk about the decline of the US dollar and how endless money printing is being used to mask the underlying weakness of the US economy and wages and income. Prices are rising everywhere you look. We're going to look at several examples today and get into a lot of charts and data, so let's get into it. Let's start off right here, and this is the Fed's own data. This is out of the Fed's official stlouis.org Fed website. This is the consumer price index purchasing power of the consumer dollar going all the way back to prior to 1920. So you may have heard this in various places before, that the dollar has lost over 90% of its purchasing power, but here it is. Even the Fed is admitting it. Now, will they admit it in their briefings, in their meetings, and in their speeches? Of course not. But when the chart that shows this decline here is on their own website, do you think that they really don't know what's happening to the dollar and how inflation is taking off? And it's actually much worse than this, you see, because the consumer price index, the CPI, doesn't take into account all of the items and goods that most Americans need to purchase. Most necessities are not included in the CPI number. It's just a basket of what the Fed considers essential. But like many things, what the Fed considers essential is not a true story. Lumber prices are up over 200% and could spiral out of control in the next few months. And this is a Fortune.com article via Yahoo Finance. Endless money printing and liquidity and bank lending and loans, combined with limited supply, is creating a storm in the cost of housing and lumber. Home builders and do-it-yourselfers do not want to hear this, but the ceiling for the cost of lumber could be higher, maybe even a lot higher. Recently, the futures contract price per 1,000 board foot of 2x4s jumped $48 to $1,420. That squeeze once again triggered circuit breakers and caused lumber trading to halt for a day. We have massive supply scarcity with a lot of the lumber mills slowing down or shutting down during the Great Sickness. We also had part of the surging demand equation. A lot more people were at home doing more home renovation projects. A lot of people took early retirement, both voluntary and involuntarily, and decided to use that extra time for new construction projects. And you can see the chart here, the lumber price per 1,000 board feet. You see the big surge to the right side of the chart here. Will it come back down like in previous spikes? We'll have to see. Even with surging prices, the Fed sticks to easy money strategy, even as it sees a strengthening U.S. economy. Now, why do you think that is, everybody? Let me know down in the comments. What do you think? Here's what I think. The Fed knows they have to stick to the easy money strategy because it's the easy money that's making the economy look like it's recovering. You see, when an economy and when jobs are based on consumption, all you have to do is print more and more money and have banks loan out more and more money, and it will bring back some jobs. It will make the economy look better, but eventually someone's going to pay the price. And at this point, it looks like U.S. consumers are going to be paying much, much higher prices, and therefore they'll pay the price. And for those of you newer to the channel, we use the term money printers here often to describe the Fed. Now, in reality, they really don't print the money. Remember, more than 90% of money is digital. So coins and dollars make up less than 10% of the entire money supply. It's basically digits on a screen, yet you and I work, in many cases, many, many long hours and go through a lot of sweat to earn these digits on a screen when they print endless amounts of it out of thin air. The bond king's market outlook, Jeffrey Gunlach, the US dollar is almost certain to decline in the medium to long term. Well, he's right about that, but it's already declining. You saw the chart at the beginning of this video. The money printers know what's going on. Jeffrey Gunlach knows what's going on. Most of you know what's going on because you buy what you have to buy and you're probably seeing higher prices. Gas prices, again, skyrocketing. And this is a 5-year chart out of gasbuddy.com. And this is the national average, and it's hovering between $2.80 and $2.90 per gallon. In some cases, it's a lot worse. Look at here in California. You have to look around really hard to find it for less than $4 a gallon. Even with prices rising, the U.S. consumer is falling for it in most cases. The U.S. consumer confidence soars to a 14-month high as house prices accelerate. So people are mistaking rising prices for economic strength. So the more money printing and loans that take place, the more that banks lend money into existence, also known as debt, it gives the illusion of economic strength. When in the background, the United States does very little production and manufacturing, and we have to import much of what we have to buy. And you see cargo ships lined up off the coast of California to try to meet the surging demand caused by the money supply printing and lending. And the helicopter money does not look to be stopping anytime soon. Biden is to propose a $1.8 trillion family plan in his primetime address. And this package is a combination of tax benefits and credits combined with increased taxes, child tax credits, child care assistance programs, free schooling, higher education and Pell Grants, more paid leave for family situations, income tax hike, dividend tax hikes, death taxes, and more. And this is so lengthy that we'll have to go through this entire package in an entirely different video, but you get the picture. Money is being spent and created, but somebody is going to pay for it. The working people are going to have to pay higher taxes to what they're going to tell you is they're going to tell you that you have to pay for all of this spending. And most people will believe it. They believe that they have to give up a larger portion of their paycheck to pay for this because they're not being told the truth, that there's an endless money printer behind the scenes. So while people are drinking beer, eating Doritos, and watching the ball game, not paying attention, some will say they get what they deserve when they end up paying for all of this insanity. Okay, we're going to wrap this up, everybody. Thanks for watching this report. Hope everybody's doing well at this time. Continue to hedge yourself against this money creation madness, the inflation monster. I continue to accumulate silver. I think that's the most beaten down asset. Roughly half of its all-time high. Link down below if you want to grab some now before the price skyrockets. And I think silver could be the next thing to really start taking off in this inflationary environment. The only thing stopping the runaway prices is going to be if somebody or something pulls the plug on the money printing. Is that going to happen? What type of situation would have to happen for that to take place? Either way, it's not going to be pretty, everybody. Continue to prepare. Stay well, stay safe, stay prepared, everybody. Bye for now. Peace.